Hello everyone. So in chess, there's a thing called a blunder. A blunder is basically when you make a very stupid move. So in today's video, I'm going to talk to you guys about the blunders that I made today. All right. So I hope you guys enjoy. And without further ado, let's get started with the video. Okay. So number one, clear as day. We were looking at how yesterday was a very, very bearish candle. All right. This is the chart of the SPY, very, very bearish candle. And especially when you look at it on the SPX, we had a very, very bearish candle at a level of resistance that I drew probably months ago. So yeah, easily months ago that I drew this level here. So we came back, tested it perfectly, and this was a clear cut, very, very bearish sign. So throughout the day, I wasn't expecting us to just so essentially what ended up happening was as the day started towards like the beginning of the day, setups that would normally get a bounce were not happening at all. And what I was saying yesterday was, in terms, how I literally said this yesterday, in terms of day trading, you have to take day trades alongside the immediate momentum. So the immediate momentum for today was bearish, and so this caught me off guard only because the day before FOMC, we generally don't get this much of a trending day like we did today. The first few hours of the day, we completely just fell over and over and over again. Any semblance, any sort of opportunity that there was for a bounce, that would above 80% of the time would end up bouncing. We didn't get any of those bounces. So that ended up just, we got a string of losing trades for today because, number one, I just wasn't expecting them to just keep it that weak for today. And then number two, the immediate momentum was bearish, and we were going against that bearish momentum. So I was even talking about the levels that would need to hold for bullish and bearishness, right? And at the open, we quickly, we were below 414.35 very, very quickly early in the morning, and even we were below 413 as well. So there were multiple levels to the downside that we comfortably just started to break below. So it is what it is. Not every day is just an easy automatic day, but just in general on the daily chart, if you look at the daily, so say for example this chart, this candle wasn't here. If you're looking at it and we opened up red, right? So say for example, yesterday we have this candle here. Today we opened up red. Automatically, that should tell you that the momentum is bearish because this was a very, very very bearish candle. But because for whatever reason I was trying to catch the move to the upside, it was a very, very low chance that these moves that I took to the long side, they would not work. So it is what it is, but it's very, very rare for something like this to happen, and it doesn't usually happen. So can't really be that upset about the situation there. So that's basically it for the SPY. We could also just take a look at the rest of the indices and everything, but for now, this is really it for the SPY. I guess in terms of technical analysis, this 408 level obviously is very, very, very important. And the level that we would need to reclaim, in my opinion, for us to be bullish once more is 412.50. But tomorrow we do have FOMC minutes. We have the meeting coming out as well at 2 and 2:30 p.m. And that's going to obviously be very, very important for the market. So a lot of these levels, they just won't really be that important. What we're going to have to do is we're going to have to see, the most important thing is we're going to have to see how the market responds tomorrow at the close. So the levels that happen at the close tomorrow are going to be way more important, because day trading tomorrow in general we could be, I mean, you know, we could be down here at 410, and then the Fed will say something bullish, and that would propel it up multiple points. So at the time of the meeting, etc., like the levels won't matter as much. And even if we're trading above 412.50 before the meeting ends up happening, that doesn't necessarily mean that the meeting is going to be bullish, right? So we could be trading comfortably at 413, for example, and that doesn't, you know, that doesn't automatically mean that just because we're trading at 413, the Fed can't release some news that will end up dropping the candle back down to 408, for example. So, you know, just we're gonna have to basically see how we respond tomorrow. So if tomorrow's close, we end up closing above 412.50, 413, then that would be much better for bulls. But if we end up closing below 410, then below 410 is that's when I think we can end up just falling lower here, and this could picture a top. This could be a top here, and but yeah, those are the two levels: 413 and 410, basically. So 413 to the upside. If we close above that, that should be a bit more bullish. If we close below 410, that should be bearish. So there's my thoughts on the SPY. Next, let's take a look at the VIX. So obviously we know that the VIX has an inverse relationship to the market. If the VIX is doing well, that means that the stock market is falling and not doing well. So the VIX obviously had a green day because the stock market had a red day. So the most immediate thing that I want to talk about on the VIX is this MACD indicator. This MACD indicator, also the fact that we closed above 17 and 1750, those are two important levels that we need to close above. But now this 18 is specifically the 19 and the 1950 levels are going to be very important for us to close above on the VIX. And that would lean to more bearishness. The 19 and the 1950 levels are very, very important right now on the VIX. And basically the other thing that I want to share was this MACD indicator. So the MACD indicator, you can see that we had a green day on the VIX, very, very green day. But the MACD barely moved upwards. So that means that there is more room for this MACD to move upwards. The importance of this MACD is that as we cross above on the MACD, it's a bullish crossover. And generally when we get a bullish crossover, that leads to 1 to 2 days of neutral to bullish behavior on the stock. And since this stock is inverse to the market, if we get a cross above on the MACD, we'll get 1 to 2 days of bullish behavior on the VIX. 1 to 2 days of bullish to neutral behavior on the VIX as this moves upwards. So there's still a lot more room for a crossover to happen on the VIX's MACD here. So that's a pretty good sign for bears, especially given the fact that we also closed above 1750. So the VIX is showing potentially more room to the upside, and the SPY is also showing more room to the downside. But of course, all of this is very, very circumstantial. We have the FOMC minutes and the meeting coming out tomorrow. So we're just going to have to see how that plays out before anything else. But aside from that, you know, today was a good learning lesson. Immediately, all we literally have to do is just play alongside the daily momentum. There are levels that prior to the day. So all we have to do, literally, it's so simple. All we have to do is literally like, so today, right? I mean, it's not going to really apply for tomorrow, but say for example, tomorrow was an FOMC. So immediately right now, this is clearly a bearish, momentum. This is clearly bearish momentum. We had a reversal at the top, big red candle here. So now we would need to tomorrow, if tomorrow was not FOMC, we would need to just lean short. So at levels of resistance, all we would need to do is just go short. Any sort of weakness as we hit a level of resistance, all we need to do is just go short. Instead of going long at support, we just try to go short at resistance as much as possible because that is the overall momentum. And it's just so simple and it's so easy to just trade like that. That's it. Yeah, but today was a nice little learning lesson. And of course, you know, it's not something that's out of the norm, but the thing is that just today was statistically just very rare. So that is the only excuse, but aside from that, there are no real excuses. Immediately, the most important thing is, regardless of the anomalies, the statistical anomalies, you have to just trade alongside the trend. And yeah, that's the easiest thing to do, is you just wait for pops. So for example, today, as we would get a big move to the downside, if you get a pop back up to a level of resistance, you short over here and continue to the downside instead of trying to go long. And what we were doing was we were just trying to go long to catch the move to the upside so that we could then go short. But that clearly did not work. So yeah, tomorrow should be better. Definitely will be better. And yeah, I really hope everyone had a great day. I hope everyone enjoyed today's video and today's stream. I hope this helped. This explanation of everything also helped. And regardless, you know, I love you guys and thank you so much for your love and support. And yeah, I will see you guys bright and early tomorrow morning. Thank you so much. Have a good one.